All right. Sam here. We are, mid-morning, January 10th, Wednesday, January 10th. Had some members interested in an update on Ethereum to the US dollar on GDAX, Coinbase, as TradingView calls it. So it's gotten kind of a bit tricky here. Some interesting things that we can see here. Now, just as a reminder as to why, why going through all of this wave labeling matters. So here, and I've shown this before. So here was the big, so I'm going back in time here. So this is the big run up, the big down here. So this is Ethereum at $200. So before we start this huge move up here, which I have labeled as a third. So, given the third, so we get a completed 5-wave structure to top for a third. What does that mean? So we're going to pull from the 2 low to the 3 high. Where do we go? Okay, to the tick. All right, anybody surprised by that? You shouldn't be. That's just a... I get it's almost I don't have to say much there really. So I've shown it so many hundreds of times. That you have to buy that is really what it comes down to, right? So if you're a trader and you're a technician, you got to buy that. You just that's a you don't get those all that often, right? So that's just particularly on this scale, or to complete this huge wave here. Down we go for the fourth. You got all the even if you weren't pulling fibs, you've got all this congestion over here. This was prior indecision here before we went up to finish that wave. You come right back to it. Now the fact that it's perfectly technical, that's the kicker, right? So there you go. So there's our 4. Now we're trying to put in a 5 somewhere up here. Now keep in mind though, the premise is if we're putting in a 5, then the retracement is of the entire move, right? So that's hard to get your head around, right? Because what we're talking about is completing a 5-wave structure of the largest degree here, and maybe it's up here. What's that? Call it roughly $2,000. If that's the case, 50% is down at 1,000. Now, so remember, I'm in log scale. I'm sorry, I should have mentioned that. So we're in log scale. So if we're going to top up here around 2,000, well, where's 1,000? 1,000 is down around here. So in log scale, it's going to look a little bit differently because it's compressing. It's compressing the upper numbers relative to the lower. So, but it also gives you better clarity in subdivision. You can see it a little better, particularly when you have a move this range that is this severe. So where are we now? How does this help us? Okay. So let's get back to a range that we can work with and relative to where we are. So we come out of that perfect technical low. We get a 1-2. Now it's a shallow 2. But remember, it's distorted because we're looking at. So let me take this off because we're looking at it in log scale. So if I pull from that low up to this 1, it's shallow. So it's between the 38 and the 50. So, that was a tougher buy because we were all looking for it down at the 50. So, statistically, only 12% of wave 2s only retrace to the 38.2, but 12% means it happened. So, in this case, the market was just too strong. We didn't blast off of it, and we stayed in that range for a little while. But now we can look at it in the benefit of hindsight and say, okay, there's the 1-2. The tell was that we came off of this low in a 5-wave sequence to put in a 1. So let me open that up a little bit so you can see it. So here's the extreme. Here we get an A, B, C. Now everybody's down here, and me included, waiting for the 50. We don't get it. We move away from the 38, but we get a 5-wave structure to imply that we've got a good pivot here, even though it's shallow, even though it's statistically, only in the 12% range. It plays. There's your A, B, C. There's the shallow C, but it does go below the low of the A wave. But we move away in a 5-wave sequence, right? So that's what you're looking for to confirm this pivot. Had it moved away in a 3-wave, we could have been thinking A, B, C into a B, and then we come down for the C wave to the 50 where we have higher probability for a wave 2, but we don't get it. What do we get? We get a 1-2, 1-2. So 1-2, 5 waves up. Here's the tricky one. So from this low, We go up to that wave 1 high, and we go just shy of the 786. Now, we know that a wave 2 can be anywhere from the 50. Well, if we're going to include the 12%, it can be anywhere from 38 to 78.6. So, highest probability zone, let me phrase that way, is between the 50 and the 618, but at times they will go through and challenge the 786. It's a push to get to new lows, to break that low. Market's too strong. So take note of what we end up with here. We get 1, 2, 1, 2, 1, 2. So when you see that, that's extremely bullish, because we're carving out 1s and 2s, meaning that there's a lot of upside yet to come. So the 5 wave here, we get an A, B, C. So here's the A wave, A, B, C, into the B, down we come into the final C, and then we move out of that and we get our 1 wave. So we've had 1, 2, 1, 2, 1, 2. I know it's tricky and it doesn't always make sense, but that's just how you have to count it, right? So it's what fits, what works, what plays that doesn't violate the Elliott rule count. So here's our, we're working from the 2. We get a 1. Where do we go? Right to the 786, just as we did down here. So you can see there's that pattern for that to complete. And we get this little spike was tricky, but we get an A, B, and then A, B, C down. Here's the 2. So we get a 2, and then we move away from that impulsively. Okay, so once we get this move here, now we're validating all the prior 1, 2s. Because here's the 3, but it's relative to this 1, 2. So it confirms the 1, 2, 1, 2, 1, 2. Up we are for the 3. We get the shallow 4. We come a little shy of the median line. That was a little bit, of a point of caution. We don't make the median line because we have Andrew's trading principle number 1 here, that with 3 correctly drawn pivots, if those pivots hold, we have an 80% probability of making the median line. We get a little shy. We don't make it here, and we're just a little shy of the negative 1618. That was tricky, right? So some of this is easier in hindsight. I understand that. I'm not discounting that. But the point is, here's the 1, 2. Here's the median line trading principle, and it's not until right here that we first start wicking the median line. Okay, so then but look what we do every time we get close to it. Back to the lower parallel. Back to the lower parallel. So here now we can see a completion here of a 5-wave structure. 1, 2. I'm going to take this off just so you can see it a little bit better. So how do you identify, when it's doing this, where's the 3? Why is that the 3? Well, it's the same thing I've shown you many times. We're going to look for the statistically probable zones. So if that's my 1, 2, well, here's my highest probability zone. Here's the 168. We get through it. But this is the deepest retracement that I get to complete that 3, giving me an A, B. Now I get a double top. Well, it's not quite. Almost a double top. Here's the push down for the 4. But this likely becomes the 3 because of this impulsive action right here. So it's a little tricky. You're kind of feeling as you go. Does that play? If we come down here for the 4, that's tricky. And some of this, you have to come back after the fact and say, well, if that's the 4, I'm coming up here. Can I get 1, 2, 3, 4, 5? I complete waves within waves. I get the subdivision. I know this is confusing if it's the first time you're learning this, but what you're looking for, where are the deepest retracements along the way to help me try and identify my 4s or my 2s. 2s statistically much more likely to be deeper. Remember, the highest probability for a 2 is between 50 and 618. For a 4, it's high probability zone is 38 to the 50, but we often will see 4s that are at the 23.6. So this, okay, let's check it. So if this is my 2 to my 3, what do? Well, here's the 23.6, here's the 38. We don't get there. Very shallow 4. But then we move away from it in a 5-wave sequence. You see, so there was some potential that was the 5 here because we had this confluence zone here. So we have a hit of the median line. You see that? We get the hit of the median line, and we get the reaction. So here, it still could be that we have an A, B, C into the 4 here. At this point, it doesn't matter as much, but I think what we have here is a final push up here for the 5. There's the 4, because from there, then we go again. I know it's confusing. Then we get the big rally up. So we've completed 3, 4. If that's 3, 4, now I'm up for the big 5. So now you have to start, this is why you have to keep track of the degrees. So we have 1, 2 in white. Then we have 1, 2 in green. Now we're looking for subdivision within the green here. So can I get 5 waves to make that fit? Does that fit? Yeah, it's a shallow 4, but then I get the final push up here. So I have got a 5-wave completion here with all of the appropriate subdivision that I would anticipate to give me a high here for my third. Then we get the rip. Now the last video I did, which was no more than 3-4 days ago, we were looking at that, and I was looking at that, saying, okay, well, most likely, given how abrupt that is, that's the A wave. So I was looking for this. I was looking for the A here to the B, and then maybe the C down here, looking for that Vegas wave support. Anticipating that given the size of this move, that we might get that telltale shallow C wave that we're experiencing in crypto all over the place. So I was down here waiting for the C. Didn't get it. Didn't get it. So I'm not in this trade at the moment because I was down here waiting. I missed the ride. So okay, well, no problem. All right, if we're missing that, yeah, that's, I'd love to have it got here. In hindsight, you can go, oh well, there's the ABC. You can say, okay, well that certainly played, but for me, it wasn't exactly what I like to see. So I didn't catch it. Now let's check that. So given the abruptness of that pull down here. If we look at that and go, okay, well, if that's the 1, 2, how does this play relative to my 2 wave, what I'm expecting for my third? So we come here. So let me take this off. So again, it doesn't pollute the chart. So you can see it. So from the 2 to the 3, we come just a few shy of the 50. So that's the classic algo front run there. But, again, I thought we'd go up for the B to the median line, come back down one more time to get that 3-wave subdivision that we want to look for in a fourth, but we don't get it. Right? So what do? So there's 3-wave subdivision here. So if I open this up, it's there. We get an A, we get this very shallow little B here, and then the spike down. It's definitely there, but I was just personally just expecting a little more subdivision. We don't get it. What do we get? Another 1, 2. So where are we? Where are we in the count? Well, if this is going to play as my 4, and now that I've gone this far, I can look at this and say, okay, well, likely I'm putting in my 5th wave here. But, I've got some market geometry here that's playing, it's pretty interesting. So I can work from that and go, okay, if that's my 2, well, where's my 3 going to be? So I'm going to start checking these levels. So we're always checking the pivots to validate them. So yet again, another shallow 2. We only get to the 38. Right? Remember, it's 12%. But strong market, strong impatient buyers. Could be algos are just front running it here. Typically, they're going to be buyers at the 50, but for whatever reason, this is getting front run at the 38 too. Maybe it was rotation as Bitcoin was selling off. For whatever reason, it gets front run at the 38. So again, 12% of the time. Now look how we've had that. So here, 12% of the time. 12% of the time, strong market, it's impatient, doesn't want to wait. Here was the 4 at the 23.6. Again, strong market. So these retracements are valid. They are not in the statistical majority of retracements that we see, but they don't disqualify the count. So if we're here now putting in our 5th, well, what does this look like? Well, let's scrunch up a little bit and do some measurement because that's all we can do. So I can look at this and say, well, if this was front run at the 38, well, they've already made their target. So let's look how that plays with regard to Elliott Elliott wave fib relationships. Okay, so I'm going to take the length on the assumption that's my 4. I'm going to take the length of my 1 wave to what now would appear to be our 2nd wave. And note here's the 100% right here. So I can't do this yet. I can't do that yet. Well, let me rephrase that. Odds are that we've got one more push up. This could be the 3rd, assuming the 5th was going to be shorter. Remember, the 3rd doesn't have to be the longest. It just can't be the shortest. So I would be looking for one more kick up here to complete the 3rd. But if we retrace here, now remember, we're in the 5th, so we could have an ending diagonal. So we could allow for an overlap of the 1. If this is going to play as 1, 2, 3 with a shallow 3, Well, then we're going to be anticipating that the fifth can't be longer than the third. You see that? Third can't be the shortest. So if my 1 is pretty steep here, the range here for the 1 is high. So I could finish with a diagonal, with that, assuming that fifth was shorter than the third. That plays. Or I could get this one more little kick up here. If you look at the subdivision, maybe I've got a little 4 coming in here. I get one more kick up here, and then I complete the third up here. That's what I think is more likely, but it remains to be seen. So we've got the median line potentially coming in play here as we hover, get close to it, get close to the median line. So potentially 1, 2. I'd prefer it if we got a little kick up here to at least get 100% of the 1. I'd feel better about the count. Then I'm all over the 4. I'm looking for the 4. So where am I? Again, hypothetically, let's say we get there. So I'm going to pull from my 2 to that 3, looking for the 4. Maybe we're at the 38, which would be perfect right at the median line. Now, it remains to be seen, right? So, if the 4 comes down here and we overlap the 1, then I have a diagonal. In a diagonal, I'm going to measure from the length of the start of the 1 to the peak of the third. So let's just to walk you through it. If this is my third, and my 4 comes down here and overlaps the 1, then the range I'm going to look for statistical significance for my entry, I'm going to pull from the low of the 1 through the 3, looking for the 4, anticipating. So if we get that overlap, I'm anticipating one more kick up. Yeah, come here. To complete the fifth. Right, so if I go from here, if that's my third and I overlap here, I would be anticipating somewhere, anywhere here at the 50. That's the next opportunity if we overlap the 1. So what do? We wick off the 1 and we wait and see. Which way does it go? Are we getting another little kick higher? Are we going this way? If I pull that around, are we going this way up to complete the more desirable outcome here for that to be a third? Or is this going to stay as our third? We're going to kick down, overlap, go down perhaps to the 50 here where we've got this lower parallel. There's the Vegas wave right here at the 618. So we've got some potential support zones down here. So we wait and see. There's the algo target, if that is the low, and we're going to pull from the low here to the 3 high, and we're buyers at the 50. Well, here's our target. We're sitting right now at the target of the larger pull of this 50. Do you see that? So if I back out, here's the 50, here's the algo target. We've already hit that. So that's why you're seeing this reaction here. So here's the front run at the 50 from the deep drop here. Algos buy it, up they go. They've already got their target. Already got it. Now we're trying to see if we can get a little Elliott wave to kind of surf in around what they're doing. See if we can get a little bit more precision here. We might. So that's what we're looking for. Maybe a little push up here one more time. This would be shallow. There's the 23.6. We know that happens, and certainly that wouldn't be surprising. So if you look at that, that would actually play because the third would be longer than the fifth, assuming we're going to the algo target. Well, then you got to consider that. Well, if that's done, what do we have now? We have a complete 5-wave structure, but we've got a complete 5 of 5 of 5. Right, as we were talking about before. So we're looking somewhere up here for a significant top. Here's the big 5. Right, now we don't know. I'm not saying sell Ethereum. I'm saying we're closing in on a 5th most likely, given the high probability that was our 4. Somewhere up here, we're going to put in a top that's going to be significant. Then we're looking for a retracement of the entire move. Now, people are resistant to that. They think it can't retrace that much. Oh, yes, it can. Oh, yes, it can. So here's 1,700, 1,800. Here's 2,100. So we going back to. Let me take it out of log so you can get it, so you can see it. So let me go here. So can we go all the way back here? Where's 1,000? Let's say we get to 2,000. It's right here. That doesn't seem that unreasonable if you think about it. So here, look at the structural support here. So I'm going to take this off so to not confuse you. There's 1,000. So if we're going up one more time to get to 2,000, we're anticipating a 50% retracement for a wave 2. Well, there's 1,000. That's not that hard to imagine. Right? You see it? You see it? Now I don't know that we're going to 1,000. I'm just making note of that. Maybe we're going to 1,800. Maybe we're going to 1,700. Well, here's 850. Right here. That's the next retracement we're looking for because we've got a completed 5-wave structure. Next play is a wave 2 of the larger degree. But if you're bullish, don't despair, because what does that mean? If we're going to come down and retrace that far, maybe we go to 800, 900. Where's the next 3? Yeah, a whole lot higher. Okay, guys, I'll wrap it there.